Now, for many investments, you can invest through things like mutual funds and exchange-traded funds. And we'll go into a little bit more detail in a second, but think of a mutual fund or exchange-traded fund as a basket of investments, let's say in this case, a basket of stocks that might meet a certain goal. Maybe they're all banking stocks, or maybe they're all part of the S&P 500, large US company stocks, or whatever it is. They're basically, think of them as baskets of stocks that give you a lot of diversification with only purchasing one product, the product being the mutual fund or the exchange-traded fund. So wouldn't it be great if we could buy stocks or buy companies that are involved with the blockchain and buy them as a basket through a mutual fund or exchange-traded fund? And it will be great, but right now it is a really brand new and emerging area, really emerging. In fact, this is a section where you're going to say, gosh, there's just not much available out there. I'm like 2 or 3 or 4, as this continues to build and emerge, or maybe in my country they don't offer this or they won't even allow it. This is an emerging area that is part of the whole cryptocurrency early emerging area of governments. How do they regulate it? How do they protect people? How do they tax it? All sorts of things. So with that said, investing in things like cryptocurrency or blockchain stock companies or whatever it is through a mutual fund or exchange trade fund, pretty few and far behind. But there's a few out there and we're going to take a look at them. But it is new, and I think it will continue to, well, I know it will continue to grow. The thing is, with things like coin investing, it's hard to regulate that. Buying and selling Bitcoin and all that, they're having governments and things trying to figure out how to regulate that. There's still early stages of that. And then you layer on, how do we now regulate coin investing and trading that might be inside an exchange traded fund or mutual fund? Well, that's a little bit harder. That's harder to do. Now, stocks have a long history of regulations, and there are thousands of mutual funds and exchange traded funds for stocks. Now, how do you build an exchange trade fund that might be oriented around blockchain and getting that passed through regulators? That's a sticking point right there. If it was just a regular old plain vanilla exchange traded fund on some index, no big deal. But you start putting the word blockchain, or certainly if you're trying to use the word cryptocurrency and start using that, all of a sudden, oh my God, the regulators, let's go crazy. But these areas of mutual funds and exchange traded funds will explode. It will just explode tremendously. So let's talk a little bit about why that's going to happen. And really, it's going to happen for the same reason that mutual funds and exchange trade funds are already popular, but also the growth in cryptocurrency and blockchain is going to drive it as well. So let's break those two down a little bit so you kind of start seeing what's going to happen here, what's going to be starting to happen in the very near-term future. So first off, mutual funds and exchange trade funds, by their nature, are already popular. They're already, people already own. They're already established and people own them all over the world. And some of the things we already mentioned, right? They give you a basket of investments, let's say stocks, so you get instant diversification. It's easy to purchase. I don't have to buy 20 different stocks or hundreds of different stocks or 500 different stocks. I could buy one S&P 500 index fund, or I could buy one large cap stock fund, and that's all I have to do. And then that gives me that instant diversification, and it's easy to purchase. You have professional management behind it. An actively traded fund would be one where you have a manager. Let's say I was the fund manager and I'm actively buying and selling stocks for you for the fund, and then anybody who invests in the fund, I'm doing that for them. And there's good and bad about active management funds. One of the things, they have a hard time beating their index because it's of the constant trading, but also they have higher costs, which also makes it harder for them to beat an index fund. The index fund is another part of professional management, but it's very simple and basic, where we're going to track an index and then we're just going to buy and sell within that mutual fund or exchange trade fund that tracks that index. We're not going to have a smart person trying to figure it out. They're just going to follow the index, and that could be very low cost and very successful for investors. Also, the investors have less decision making. I don't have to think about whether I want to buy and sell stocks or individual stocks. I could buy a mutual fund and then let somebody else do that for me, or just follow that fund. And many of them can be very, very low cost, especially if you consider how many stocks they might own. They own 400,000 or 500,000 of stocks in a mutual fund. Just think if you had to try to purchase those all on your own individually and then try to manage that, and the costs that you would do that by incurring costs each time you buy and sell. Mutual fund companies, exchange traded fund companies, basically do all that for you. So how could an emerging area such as Bitcoin, or Bitcoin, but cryptocurrency in general and blockchain type oriented companies, how could that not be something that would be a mutual fund, because it kind of really lends itself well once the regulators kind of figure it out, because they're already getting the stuff that's already established in a mutual fund or exchange traded fund, which is these points here. The other thing that's going to really drive it for, particularly for cryptocurrency stocks and blockchain-oriented ones, is these companies that are related to that. It's going to be big for them because people are going to drive that. They're going to we want this. And so they want those, crypto-related companies and blockchain-related companies as a portfolio, as a mutual fund portfolio. But then the actual cryptocurrencies themselves, you get to that point, that's going to be able to make it easy to purchase and take a lot of fear out for a lot of people. Because think about it, I have to go on some exchange and I have to go buy and sell Bitcoin, and what about Ethereum, and what about these 400 other different types of coins and tokens that are out there, and what's this thing with ICO or initial coin offerings, and how is that like an IPO or initial public offering with stocks? There's a lot to it. That's why I have a whole course around buying cryptocurrencies. But if you can able to buy just a mutual fund or exchange trade fund that tracks something like that, well, then I can get that diversification and buy just the mutual fund, and then I can play in that cryptocurrency space. So the advantage is that mutual funds and exchange trade funds are going to drive tremendous growth in this area once it really starts to get momentum and expand. Also, you have the whole growth of cryptocurrency and blockchain in general. Certainly cryptocurrency coins, they go up and down in value. There's a lot of news coverage around that. But as we know, and we're seeing blockchain as a technology, like the internet, is a growing emerging technology. So customers of these financial service companies who sell mutual funds and sell exchange trade funds, like BlackRock, like Vanguard, like Fidelity, like Charles Schwab, like all these companies out there, they're going to have customer demand. Customers are going to be like, I want to buy a mutual fund that gives me blockchain stocks. I want to buy cryptocurrencies in a mutual fund. And banks and things and financial service companies, they like to sell stuff. They like to sell stuff and make money on those transactions. So there's going to be customer demands. And you're going to have early adopters that are going to really rush in and get market share. You think about how big Vanguard is, for example, from an index fund perspective. They were the first really big, committed company to index funds, and they've enjoyed that market share on something that's fairly easy to replicate because of their early adoption, both for small and small and large different type markets. And other financial service firms will panic too. If you've got somebody who's really making a killing by selling these types of mutual funds, others are going to be like, and their stockholders and their board of directors and people will say like, why aren't you in the blockchain mutual fund business? And so they'll start getting into it because they don't want to get left behind. And so some will offer it because their customers demand it, and some will hate it. They're like, we hate to even offer it, but our customers want it. Think back years and years and years ago, stockbrokers, when mutual funds and exchange traded funds first came out, they're like, well, they're replacing our jobs. So I'm supposed to pick the stocks for my clients and charge them a very, very high fee versus now they can get this low-cost mutual fund or whatever, ETF. So those are two of the big things that are going to drive it, is the customer demand and just the need for it, and what already mutual funds and everything was already doing for it. So my prediction, we're really early stages, you get a couple players in there, and this will start growing, and then you'll have some point, especially when some big guys get in there, the big financial service companies get in there, and the offerings of mutual funds and exchange trade funds in this space will explode. So be watching for that. Once you get through some of these government regulations and stuff, it'll really start to explode. And give us, as investors, some really great options. I mean, I'm looking forward to that. I would love to buy a low-cost exchange traded fund. They'll give me some diversification both in cryptocurrency coins, so I don't have to be buying them all myself, and I want to have that be a little bit more passive income, but also I want to have some core things already preset for me, maybe to invest in a bucket of companies that might supplement when I'm investing in maybe a couple pinpointed companies through individual stock investing. But that's me. For others, they'd be like, nah, just give me a mutual fund and I'll be done. And that'll be part of my overall portfolio. And that's terrific too.